analysts are highlighting that equity markets are expected to remain positive, driven by the forecast of declining inflation and a perceived peak in the interest rate cycle. That's as 2023 ended on a high note, with the South African equity market rising 7.9%, led by gains in financials and industrials, while resources fell sharply. Portfolio manager at PPS Investments Reza Hendrickse speaks to us about these dynamics. Thank you so much for your time, Reza. Let's first paint a picture of where equity markets left off in 2023. Not too bad of a stance.
Yes, we had a good year last year, particularly in foreign equity markets, where we saw returns, especially in developed markets, and the US specifically, in fact, rising quite sharply, north of 30% in rand terms. We had a bit of a boost there because the rand weakened, so translated back into rands, quite a strong year in foreign equity markets. You mentioned that SA equity was up more mutedly. It was up around 8%, but also driven by a very select few stocks locally.
What then does it mean for 2024 within the equity market space?
So offshore, it's quite possible that you could see that rally offshore extend. Although markets have run quite hard, so perhaps we do need a bit of a breather. We do know that it was tech specifically that ran quite hard last year, but more recently we've seen some continued strong move in some offshore US tech names. So it's quite likely that we might see that continue. But a lot will depend on sort of market sentiment, which, as you mentioned earlier, is currently being driven by inflation and rate dynamics. Markets might actually have gotten a little bit ahead of themselves just in anticipation of perhaps more aggressive rate cuts than what initially was thought. But we're seeing the sort of latest Fed comments start to suggest that maybe rates might, maybe we might see less accommodation or less swift accommodation than what the markets were expecting. So that might be something, a bit of a spanner in the works.
That spanner in the works, let's dive deeper into it, Reza, especially because the US Fed was quite correct in chastising the market analysts across the globe that do not jump the gun just yet, and maybe South Africa is expected to do the same. How much of that then changes the near-term outlook and the forecast there?
So I think the markets were quite optimistically looking for the Fed to start cutting as early as March, and then for possibly look for sort of 6 cuts over the course of the year. But I think the latest commentary that we've seen is that possibly those might only be 3 cuts. And so inferring on from there, it could only be that sort of in the second half of the year we start to see some policy accommodation come through. But whether it's March or June, I don't think it makes a material difference in the grand scheme of things. I think the main point is that we are at the peak in the interest rate cycle. And so once we see the Fed move, I think that locally the SAR will also then take that as the green light, and we could see some, or at least we will see some monetary policy accommodation locally as well, which I think will be a welcome relief for South Africans.
Absolutely. There are other factors at play here, especially when we look on the side of geopolitical developments. Some remain with us, including the Russia-Ukraine war, as well as the latest with what is taking place in the Middle East. How does that factor into that forecast for 2024? We, of course, hope that nothing else transpires.
Yes, so geopolitical tension is something that's very difficult for markets to sort of price in because of its fluid nature and but also its far-reaching nature and just how quickly things can escalate. You mentioned Russia and Ukraine, but issues in the Middle East are possibly just as impactful on markets, specifically around oil, which tends to spike when you see any sort of geopolitical tension in the Middle East. There tends to be a flock towards safe haven assets when you do have some sort of market instability, whether it's gold or the US dollar or US treasuries. So there could be some sort of greater appetite for those safe haven assets. But yeah, I think it's quite, as I mentioned, those things are quite difficult to call. And so one really just wants to be quite flexible in how you approach those sort of issues.
Lastly, Reza, South Africa, on the domestic side of things in terms of how this year is meant to play out, it is an election year, but at the same time, there are issues that can be seen as the country shooting itself in the foot, referencing the Lady R matter, which saw and sent the rand on a tailspin last year. What is anticipated in this year of 2024 on the local dynamics of what could then transpire in this year?
Yeah, so I think that many of those issues that you mentioned will probably be sort of non-events locally this year, whether it's the budget speech later this month, whether it's the State of the Nation address. Those are probably going to be sort of non-events for markets, as they tend to be. It's sort of rich in short-term news flow, but in the grand scheme of things don't tend to move the needle very much. I think the one that is possibly more important to keep an eye on are the elections towards, I think around May we're going to see the elections here locally. And I think that might be something that the market will be keenly focused on. I think the big issue locally, though, and I think everyone will agree, is that we really need growth locally, and so I think that's ultimately going to be what we're going to see come through in the budget speech. There's a limit to how much the population can be taxed, and so ultimately I think that if we could just see economic growth locally, that would really fix many of our problems that we do have.
Thank you for your insights. Reza Hendrickse is a portfolio manager at PPS Investments, talking to us about the forecast on equity markets.